Hi everyone, I'm Matt from Look Into Bitcoin, and today we'll be looking at how we can know if equities have bottomed. To do this, we'll be using a number of resources that are all freely available on lookintobitcoin.com, your number one source for Bitcoin information. And if you haven't already, don't forget to like the video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. So right now we're just on the Bitcoin live price page here on lookintobitcoin.com, and as you can see almost immediately, this orange line is fairly similar to this purple line in its movements and price action. And this is the comparison of Bitcoin versus Tesla, one of the best performing stocks especially in the tech sector that we've seen over the past few years. But if we were to look at the correlation between pretty much every one of these lines, which is the Dow Jones, the S&P 500 and Apple, we'd see that Bitcoin has a very strong correlation between traditional markets and especially US equities such as stocks like we've just discussed here. So a lot of people, when looking into invest in Bitcoin and trade certain crypto, more speculative digital assets, for example, will look at the current state of the markets in traditional sectors like US equities to try and determine whether now is a good time to go a little bit more risk on with their investments, or if they're potentially anticipating a recession or more negative price action in equities, that maybe holding off and preserving capital would be the best move, especially given Bitcoin and cryptocurrencies volatility. So today we're going to look at a quick and very simplified way that we can potentially look to see if equities have bottomed in price, to maybe give us a little bit more confidence that this upwards price action we've seen in Bitcoin over the last few months can hopefully be sustained, and we're not going to see potentially further drawdown in equities and consequently Bitcoin and cryptocurrencies. So I'd like to give a shout out initially to the original video I watched that gave me a little bit of inspiration for this, which was by Alpha Beta Suit, that brought up Bitcoin's correlation to the manufacturing PMI. So the manufacturing PMI, what is that? Well, here I've just got an Investopedia article here that briefly covers it, an index that measures the month-over-month change in economic activity within the manufacturing sector. So why does this have any influence over Bitcoin and traditional markets such as the S&P 500? Well, simply put, if people are making more things, if businesses are trying to output and export more goods and services, then that obviously leads to a more stimulated economy that's potentially more active and likely leads to businesses performing better, businesses that may be included in these indexes such as the S&P 500, and due to Bitcoin's correlation, a good performing S&P 500 due to more manufacturing usually leads to higher prices in Bitcoin. So if we just go over to TradingView, we can see here I've just loaded up the S&P 500 chart, and if we go to a little bit more of a longer time frame chart such as the weekly here, we can see we've had a little bit of a drawdown period over the past year or so, but had a fairly strong rebound to the upside. But if we actually just load up the Bitcoin price chart here, we can also see, like we said before, that there is a fairly strong correlation. That's pretty obvious to most. Usually these decrease at the same time and increase at the same time. So of course it's only fitting that people, when doing their investing and analysis, will look, like we said, to more traditional markets to maybe get a little bit more of a gauge on the potential upcoming price action of cryptocurrencies. But what we can do, like we said, is load up the PMI to see the influence of that on the S&P 500. So here I've just loaded up the US PMI, and again almost immediately you can see a fairly strong correlation with the S&P 500 and this purchasing managers index. We can see very substantially when there's a decrease in this PMI level, there is usually a decrease in the S&P 500, and as we increase on this PMI, usually indicates, especially if we come from a very low level here, that potentially a recessionary market is over and we're due for some more positive price action. So as we can just immediately see, this passes the test of correlating, but how can we actually use this potentially gain an insight onto whether the S&P 500 has actually bottomed out, or maybe if this is just a pause in the bear cycle before lower prices? Well, one thing we need to consider as well is that the US isn't the only influencing economy on the world. So what we can actually do is load up here, just for a limited amount of data, the worldwide PMI. So if we just zoom in here, we can see, of course, these are very strongly correlated as well. But what we can actually see is this worldwide PMI usually is a little bit in front of the US PMI. We can see as it peaked just on this line here, it was just a few weeks and months before the US PMI actually peaked. And we can see here, if we can see the bottom, in this worldwide PMI again, it was just slightly before the US PMI bottomed out here. So maybe this gives us just a little bit of more early insight into potentially the upcoming economic changes, not only in the US, but then also equities around the world. And we can see this worldwide PMI metric actually bottomed out just a few months ago, just as the US PMI continues to decrease. Although one thing we can look at is something like the RSI, the Relative Strength Index, which is a very traditional metric for trading and investing to give you an insight into the momentum and strength of an asset. So if we just switch to the monthly chart, and like we said, because this data, especially on the worldwide metric, doesn't go back too far, and because there is obviously some correlation here, but we do see the worldwide one maybe a little bit more reactive to big changes in the market, what we can do is actually average out these two values to get a mix between the worldwide PMI and the US PMI. And if we, like we said, apply an RSI to this, so right now we're just on the monthly chart, so this is looking at a 6-month relative strength index. We can see here as this enters this red zone, which traditionally would mean an oversold market, but when it comes to PMI, it really is just indicating the acceleration or deceleration of moves to the downside. So once we see this come into this oversold level here, potentially indicates that this is slowing down, meaning that the decline isn't as steep and we're maybe seeing a bottom forming in this PMI metric. We can see as this enters this oversold area, it coincides with the S&P 500 bottoming out in price action here. Just in this slight drawdown period we had here, we could see this drawdown come down here, entered the RSI into this oversold area before we rebounded, but this PMI continued to decline until we hit this COVID 2020 downturn here, where PMI once again bottomed out at almost the exact same level on this RSI scale before rebounding to the upside. And most recently in this drawdown period we've seen this PMI just start to round off and bottom pretty much at the exact same level as it has over the past decade or so. And what we've seen here is this just start to round off in the price action. And this just means that this PMI decrease we're seeing in this combination of worldwide and US purchasing manager index is just starting to round off and bottom off. And maybe we're about to see a change in the trend of this and potentially start moving to the upside to coincide with a price increase across equities and consequently Bitcoin and crypto assets. So just to summarize, considering Bitcoin and the general digital asset market correlation to global and specifically US equities, we should look for confirmation that the drawdown period for these markets is over, as this gives us a little bit more confidence that this rally we've seen in Bitcoin and crypto assets can be sustained. And while predicting the future is challenging to say the least, looking at the parallels between global and US PMI and the price of the S&P 500, it does give us some degree of optimism that the worst may be over, or at least is slowing down before we potentially start this new transitionary period into an upcoming bull cycle. And if we begin to see traditional US indexes rally like the S&P 500, like the Dow Jones, like the Nasdaq, capital will begin to rotate into the more risk-on assets such as Bitcoin and cryptocurrencies. If you like this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to gain access to live charts, in-depth newsletters, indicator alerts, private TradingView scripts, and more, all for a fraction of the standard industry price. And I'll let you in on a little secret. In the near future, we are going to be releasing some more macro data charts like the ones we discussed today onto the Look Into Bitcoin site. So start getting excited for that, because we'll start to be giving you some more traditional metrics to help your Bitcoin investing and analysis. If there's anything specifically you'd like to see, let us know on social media and down below in the YouTube comments. I look forward to reading and replying to all of them. Thank you very much for watching, and I'll see you in the next one.